Welcome to Markets Now. I'm Michelle Rook with Kent Beadle Paradigm Futures. We're seeing a lot of green on the board this morning, a few exceptions. Chicago wheat is trying to come back to at least steady status, and live cattle futures are seeing a little pressure. But other than that, we're seeing a rebound in Kent. Let's talk about soybeans. We did score new contract lows even yesterday morning. So we are seeing a recovery, and you believe it's tied to what's going on with the Brazilian real.
Absolutely. There are a number of bearish factors that traders are citing and have been citing for weeks and months. I'll go back to the world soybean ending stocks, which was actually 134 million tons way back in August. There's been the concern about the Brazilian crop, which got planted in October, and weather has been good ever since then. And then, of course, you have the election and the worries about trade policy. And we've had that story now since November 5th or 6th. So
right. Those were all things we knew about, right?
All things that we knew about. And the soybean market continued to move along sideways, would test support, did not break, would go up to resistance and fail. But what was new this week? Well, what was new this week is that the Brazilian real moved to lifetime highs, or on a chart or lows, so to speak, and making Brazilian soybeans that much cheaper. The speculative side of our marketplace looks at the Brazilian currency, and when they see cheaper Brazilian soybeans, they end up selling soybean futures, and that's what ultimately allowed us to get through that support. When you have a really long sideways trading period and you break support, you generally have a fairly solid and substantial downward move, and that's what we had on Tuesday, and then certainly all of Wednesday and into Thursday morning. But what has happened since then is that the Brazilian real has recovered, and now it's still relatively cheap as to where it's been, but it's recovered fairly significantly through yesterday and so far this morning, and that's what's giving the soybeans the strength that we have today.
Also seeing some news that Grain in China was in buying like 500,000 metric tons of soybeans this week from the United States. So maybe that's given us a little push too, you think?
Not a new story necessarily. I'd say for at least 3 weeks now, Grain has been buying for March, February, March, time periods in which it's been fairly well documented that we are not competitive against Brazil. That is post Brazilian harvest. But there are two reasons that they're buying from us. First of all, logistics out of Brazil are fairly tight during that initial time frame. China has been buying that Jan, but mostly Feb, March timeframe now for quite some time, and there's only so many boats that you can load during that time frame out of Brazil. The second reason goes to the quality of this year's soybean crop, which is really, really good compared to what traders in China anticipate will be the quality of the Brazilian crop. And if China's government-sponsored agency is going to buy these beans to put into storage, which is probably what's going on, they like to store U.S. beans. They tend to store much better.
Yeah, I was going to say, when Grain comes in, their government buying agency, they're going to probably put them in the reserves. So that certainly speaks to that point. All right, so we made new contract lows this week. Talk about where we need to get above from a technical standpoint here to negate the technical damage that we did. We have to get back above the contract low area that we broke out of, right?
Yeah, that previous contract low was 973 and a quarter. There was also a November soybean low at people were looking at the 975 and a half area. So something above that range on the nearby January futures would be really solid. Anything above that, obviously, if we somehow manage to claw our way back to or even close to unchanged for the week, it would be a fairly strong rejection of that lower price area, and would essentially reiterate the support from the previous contract lows, and be one, leave this 75 area sort of an area which people would be able to buy against once again.
Yeah. And we could also say there's maybe some value buying when you get down to those levels as well that helped us out. Corn market, though, has held up quite well, even with the collapse of the soybean market. We're back above key moving averages. Will we go back up, in your opinion, and retest the resistance areas we haven't been able to take out?
Well, I think that that's the next objective, obviously, is that 450 to 452 area. And do I think that we can get there? Well, yes, because I continue to believe that demand for corn is better, is going to be better on a sustained basis than the amount of corn that we're going to supply at this price, because we are, in fact, still about 35 cents under USDA's cost of production estimates for the crop that we just produced. So, we have seen some, we have seen some corn movement on this last rally, to be fair. And this is the time of the year when farmers like to core bins. And so there are logistical reasons that we've seen corn move. But, from a price standpoint, we're nowhere close to being a price that's attractive to the U.S. farmer. And for the world end user, this is corn that is going into, into cattle very profitably right now. Obviously, profitably into ethanol, although not as profitably as maybe before. But still, there's some margin there, and of course, world importers know that they're not going to be able to buy corn forever at below the cost of U.S. production.
Yeah, and we got some more business to Colombia this morning, which is evidence of that, obviously.
Right.
Now, one thing that would help the corn market is if wheat could bounce, and we scored new contract lows even yesterday, and you believe that is still tied to the higher dollar.
Yeah, I do. Chicago wheat is the contract that grabs most of the speculative attention, and for quite some time there, when KC and Minneapolis were trying to make new lows, Chicago was not making new lows. It was holding up pretty well, and the one day it finally did make a new low a few Thursdays ago, it ended up reversing higher and driving the rally that we had in early December. So wheat had held up very well technically, but this rally in the dollar is, similar to a break in the Brazilian real that has a tendency to trigger certain behaviors from the speculative side of our market. And they like selling wheat on dollar strength. And that's what I believe ultimately allowed us to take out contract lows in Chicago this week.
You bet. And obviously, we're trying to follow corn and soybeans this morning. The wheat market is, but boy, it's been a really reluctant follower at that. Okay, yeah. The cattle market, let's move over there, because we've actually seen that market from a technical standpoint. Yesterday, it looked like live cattle were starting to maybe break down, even though we had steady to better cash. Now, as we speak, cattle are trying to come back here. But what's your thought? Is the top in?
Oh, I'm not willing to call the top in, honestly. What I think is that we're going to have some real volatility, and some of this volatility this week has been driven by the outside markets, particularly the U.S. equity market.
Absolutely.
Cattle market doesn't. Cattle market enjoys seeing the strength in the stock market, and
right.
It really.
And so the debacle on Wednesday obviously spilled over, and we traded some of it yesterday. Do you think, though, that we can recover from here?
I do think that we can recover. I think that the underlying fundamentals of supply are still supportive. We have to look back at the stock market and say, yes, we may have had a debacle on Wednesday, but stock market returns are still very solid when the American consumer looks at their 401k statements at the end of this year. They're going to see that they had another nice return. And I think that wealth effect, so to speak, is likely to continue to support beef demand. So I'm not particularly worried about huge huge breaks in cattle. I just think that we're frequently due to have pullbacks and corrections when you have prices that are this high.
Well, and let's put it into perspective. It's end of the year and the funds have been long here. You're going into a holiday, so it wouldn't be unusual for them to take profits. Plus, we have a cattle on feed report today.
We do. And the cattle on feed reports, of course, have been interesting because we've been seeing a series of cattle on feed reports that have shown the outright numbers of cattle on feed at 100% of year ago levels, despite the fact that inventories and slaughter have both been indicated to me be maybe down 2 to 3%. This is going to be an interesting cattle on feed report because the late rainfall in the southern plains established some better pasture for cattle to be turned out upon. And, I think a lot of people in trade are wondering if we'll finally see some lower on-feed numbers with more cattle out in the pasture.
Good point. And the hog market, every time I feel like that market is about ready to roll over, we get a surge back. And the funds have actually been defending their long position, it looks like here. But from a fundamental standpoint, we're also trading these lighter slaughter numbers, right?
Yeah, I think it's become very clear that the concerns about supply that were starting to reverberate here, 4 to 8 weeks ago on this major rally are starting to be realized in what's actually coming to the slaughter facilities. We're noticing that weekly slaughter has turned lower year over year for a number of consecutive weeks now. We were running 1.2, 1.3% ahead of a year ago for much of the year, and we've already cut that down to about 0.7 to a 0.8 increase. And that actually, this late into the year, takes some pretty low slaughter numbers in order to have that impact.
Yeah. It'll be interesting to see if USDA makes any revisions in the hogs and pigs report on Monday. But if the government shuts down, will we even get a hog and pig report?
Well, that's a great question. And I think I have not heard any news out of the USDA as to what might be open and what might be shut down. A lot depends on what the government considers as necessary, and because necessary things can stay open. Yeah, essential is the right word. Thank you. My gut is that we will not see reports if government closes today, and right now that looks like a fairly high probability sort of event.
Yeah, and something the market does not like, that's for sure.
No.
All right. Thanks so much. Let's hope that doesn't happen. Kent Beadle with Paradigm Futures. Remember, futures and options do have substantial risk. This is Markets Now.